Hi and welcome to the Insolvency Experts new video series entitled The Top 20 Tips for Surviving in Small Business Post the GFC. I'm Steve Kugel. Tip 6 in the series is, if you're using credit cards to pay business expenses, be very, very careful. So you want to fly to Europe or the United States on points. Surely there can be no better or cheaper way to do that than to run all your business expenses through your credit card, or at least through the company's card. After all, not only do you earn free travel rewards, but you and the company also receive the incredible convenience of the card and a 45-day interest-free finance facility. It's almost too good to be true. And you know what they say about things like that. So let's take a look at some of the risks in using credit cards in business. Firstly, there's cost. If I repay my credit card debt in full at the end of each month, the facility is cheap. If, however, I repay only the minimum monthly amount, the finance can become hugely expensive. For example, my recent Amex statement had a monthly balance of $4,800 and required a minimum payment of $121. At the prevailing interest rate of 20.74% per annum, which is fairly standard for the industry, how long do you think that would take to repay? Would you be surprised to know that it's over 20 years? I thought so. What about interest of more than $9,000 on top of the original debt of $4,800? Okay, so it's expensive, but isn't it a relatively safe form of finance as it's offered on an unsecured basis? Doesn't this mean the bank can't recover the debt against your house? Well, frankly, no. While a lot of people believe this to be the case, the term unsecured actually means the finance provided is not secured against a specific item or property. So while the bank cannot simply take possession of your home, this does not mean the bank will walk away from a credit card debt. In fact, banks can and regularly do commence proceedings to recover outstanding credit card debt, and this action can result in the loss of your home and even your personal bankruptcy. Now, while we're talking about common misconceptions, another one involves a director's liability for the use of a credit card in the name of the company. A lot of people believe that when credit cards are issued in the name of a company, the director won't be liable in the event the company is unable to meet its obligations. In my experience, sophisticated lenders such as banks and credit card providers do not issue credit without firstly obtaining a personal guarantee. This means that regardless of whether a credit card is in your name or the name of the company, or whether the credit was used exclusively for business rather than a director's personal expenses, a director will be personally liable for the outstanding debt to the credit card provider. Again, this means you, as the guarantor, may lose your home or be pursued into bankruptcy. Finally, and to add insult to injury, even when director have used credit cards exclusively for business expenses, they have no special priority in terms of repayment when a company enters into liquidation. And if they attempt to repay such cards in the weeks or months leading up to the appointment of a liquidator, they will be pursued for a preferential payment or an unreasonable director-related transaction. Remember, if you have a financial problem, either corporate or personal, the Insolvency Experts operates a confidential and entirely free 24-hour insolvency advice line with all calls able to be anonymous if required. Call us 24 hours on 1300 767 525 and we'll be there to help.